Okay, excellent. Everyone, this is Carter Wilcoxon, President, CSI Financial Group. I appreciate everybody being on this morning. I will be giving you a presentation, but I want to start off with talking a little bit about CSI Financial Group, and then also, if you'll stay on through the end of the call, we've got a very big, important announcement concerning our incentive trip based upon the fact that this is a new opportunity for CSI Financial Group with the product that we're going to talk about. So a little bit of my background for those who are on here for the first time. I've been in the independent distribution model for a little over a decade. Was number one with a former group out there that distributes out proprietary products. I was given an incredible opportunity to start my own firm a little over a year and a half ago. So we have been doing a great job of conveying to our advisors that we are in the relationship-driven business. I know there's a lot of larger firms out there. We're very boutique-y. We care first and foremost. We provide products that you will be able to sell and that you'll recommend to your clients at the point of sale. But just know that first and foremost, giving you the type of service that you not only want but need out there in the industry is very, very important. We do not have voicemail here. You'll get a live person that answers at CSI Financial Group every single time whenever you do call during regular business hours. As well as all business comes through us. We scrub it all up. We make sure that, you know, at the end of the day, all you know is you got paid. But, you know, we make sure all the I's are dotted, the T's are crossed, and we are, again, like I said, very much in the relationship business. We're goal-oriented in that manner. We are not a spreadsheet marketing firm. We have a core line of products, and the one that we're getting ready to talk about is the reason why, if you stay until the very end of the call today, you're going to be incentivized with this as well, so it gives us a great opportunity. So with that being said, let's get started. The Pacific Index Dimensions is the name of the product offered through Pac Life, obviously. And we're going to talk about the agenda this morning. I'm saying morning. It's 11 o'clock out here in Phoenix, Arizona. I know some of you are in the Central and the East Coast, so a little bit afternoon for you. We're going to talk about just some basics, the market, about fixed index annuities, the opportunity that's out there, things you'll already know anyway. We'll talk about the Pacific Index Dimensions difference as well, some additional product features that are going to be optional. And then the last thing prior to the announcement is that we will be talking about the commission options for the product. So as most of you on here already know, FIAs, or what we used to call them as equity indexed annuities, make up more than 50% of the total fixed annuity sales in our industry. So you've got DIAs that are fairly large out there when it comes to income later down the road, immediate annuities, if you want income now, which we're going to be talking a little bit about the opportunity with this index annuity as well. You know, just traditional fixed, and then, you know, your overall fixed market. So you can see the incredible increase for indexed annuities compared to every other annuity that we may sell or at least have access to. So again, nothing new for most of you on this call. Great sales opportunity, just reinforces you are in the right industry. And with 10,000 baby boomers a day that are retiring, we're trying to show you and share with you an incredible opportunity here that you'll be able to present to those clients, a name that they've heard, and they've seen this picture. When they see these commercials, the whale jumping out of the water, it's very, very important when you're making recommendations that you're making recommendations for a carrier that you can at least overcome. Not to say they don't buy you already, but this is one less thing you have to jump over through any hoops or any hurdles over. So just, you know, your fixed annuity, index annuity basics, obviously non-qualified money. We're talking about continued tax deferral and the triple compounding effect. This is safety of principle. It's impossible with this product, the way it's created and designed, to ever lose any money whatsoever, whether it's market or any type of spreads that are within the product. A market-based growth potential, you've got access to money, We'll talk about the lifetime income as well as an option, and then the beneficiary protection that you already know about as well. Some of the PAC index dimensions additional support are not only the ratings and the service, but the support you get from the back end for working with a company like Pacific Life. They have an advanced marketing team with CPAs and attorneys that you'll have access to, that obviously I have access to as well, that can help you with some of those maybe more difficult situations that you may come across. So you've got a choice of interest crediting options. Very excited about that. And more so, the simplicity and the transparency of this contract. It's just easy, simple, and understandable to your consumer out there. As I mentioned earlier, you have an optional guaranteed minimum withdrawal benefit or an income rider, and then a choice of a competitive withdrawal charge period that we'll talk about as well. So let's just talk about the ratings here for a second. What I want you to notice here is, unlike a lot of carriers that you may be working with now, and another reason why I love the Pacific Life name and branding, they not only have the AM Best and the S&P that we're all sort of accustomed to, they also have a Fitch rating and a Moody's rating. So this just goes to show you how important it is for them to have higher ratings and lots of rating services. The Pacific Life service, the Pacific Promise, 10 seconds or fewer average call time. If you ever do need to call there without going through us first, we do handle all of that stuff. Same-day processing of new applications. Same-day call on request and not in good order. Anything that's NIGO or not in good order, they will reach out to you on the same day and let you know that if it gets through us and we miss an I or dotted or a T not crossed, they will reach out to you on the same day and let you know to get that business issued. All transfer requests are mailed overnight. Suitability takes, once it gets in, is a 24-hour turnaround. Once suitability is completed, they will send out the transfers overnight. And then contracts are going to be mailed within 24 hours of issue directly to you. And then obviously, you know, they've won multiple Dalbar awards for service. And you'll see when you work with them that's another reason why our alliance with them is we're very excited about here at CSI Financial Group. So you'll have access to support from many of their different teams. They've got their own consultative wholesalers internally. If for some reason, you know, you end up moving directly with them and not getting us for any reason, which will be few and far between. But they have advanced marketing. You know, like I mentioned earlier, there are CPAs on staff, there are attorneys on staff. All of that you'll have access to. They have a retirement strategies group that I'll have access to as well as yourself. Access your book of business. You'll be able to download any type of applications and forms and marketing pieces to be able to brand specifically. Online calculators, not to say that it's just the illustration, but they also have additional R&D calculators and things of that nature as well. So let's get into the product features of the Pacific Index Dimensions. As I mentioned earlier, it's just simple, it's transparent, it's so consumer friendly. You've got your traditional index annuity here with great accumulation potential. You have a 1% guarantee for a fixed account. We'll get into rates on the IndexLinked Options in the current fixed account, as well as the movement of two different indices as well. So when I say it's simple, it's really as easy as 1, 2, 3. You're going to choose the index. You have two of them to choose from, whether a domestic S&P 500 that we all know about, or the MSCI EAFE, which is an international Europe, Australasia, Far East international indice that gives you backtrack records as well. If you have any questions on that, please reach back out after the phone call or after the webinar here, and we can talk more about that specific indice as well. Number 2, choose the index crediting method. You have an annual point-to-point with the cap. You have a participation rate with no spread, and then you have the enhanced participation rate with a spread. That's going to give you the better upside potential. And then number 3, whether a 1-year or a 2-year reset. So it's just as easy as 1, 2, 3. So the question really becomes which one of these indices, or what's going to be better in what kind of markets? Well, just for illustrative purposes here, let's say you have a negative 15% index return, whichever one you choose. Well, it's completely principally protected, so 0 is your hero, worst case scenario. You have a 5% return on the index. You can see here with these assumed caps, don't get locked into these because we'll talk about the rates here in a second. They are actually better than this. You've got a 4.5% cap. Index does 5, pretty simple. You make 4.5. If it does 15, you get 4.5. If it does 30, you get 4.5. That's easy. So on the participation with no spread, if the market, again, negative 15, these are all the same. At 5, you'll get 2. At 15, you would get 6. So the greater the return on the index, the greater the uncapped participation rate or enhanced participation rate is going to garner you for a interest rate. And then on the last one here, 55 par rate with the 2% spread, these are all annual resets here that they're showing for illustrative purposes. You can see, as I mentioned earlier, the higher the upside, the higher the return, the more on the enhanced that you're going to see a return. So is there a best index-linked option? And the answer really is it just depends. When you're talking about a bull run that we've been in the last 7 years, obviously back testing proves this. It's been incredible on the upside potential. But then for simplicity, a lot of the people that are on this call and a lot of the advisors that I work with, they like the nice, simple annual point-to-point with the cap. So it's up to you. But here's the great part. As we look at the rates that are current right now, you don't have to choose just one or the other. You can mix and match just so long as it equals 100%. So for example, as we see here, the annual point-to-point on the 1-year term, so you've got the S&P on the left-hand side, you have the EFI to choose on the right-hand side. That's number 1. Number 2, you get to choose your participation rate, enhanced participation rate, or your point-to-point with the cap. Then number 3, you get to choose either a 1-year term or a 2-year term. So what you're going to see here is an annual point-to-point with a break point, anything over 100,000, you're going to have higher upside potential. As well as if it goes to a 2-year term, those pricing options that the carrier have to buy are actually cheaper for the 2-year, so you'll see the greater upside from that. So for example, the annual point-to-point with the cap is 5.25 over 100,000, but it's 11.4 if you do the 2-year. And then on the enhanced participation rate or the participation rate, you'll see that it's 44% for a 1-year reset with no spread, which, by the way, as I've done the back testing on that, it's actually outperformed the S&P over the last 10 years. So that's because of the reset feature in these index annuities. So don't get, I know sometimes your clients get, what's happening with my other 56%? What are you doing with that? This is just a crediting strategy. But bear in mind that this crediting strategy, just the 1 year at 44% over the last 10 years, has actually outperformed the S&P because you don't take the downside. And then if you look at a 2-year, you can see that you can get as high as, on the enhanced, 81% uncapped of the S&P with the 4% spread. So if 81% generates you 20% return in 2 years, minus 4, we lock in 16 for an annualized average of 8. So, and then if you want to, in the fixed account here, you'll see 2.6% current interest rate in the fixed bucket of this indexed annuity. Very, very strong. So let's talk about the enhanced lifetime income benefit or an income rider. Completely optional. The income has to begin after age 59.5. You have an 8% roll-up or through resetting in the crediting strategies, whichever one's greater. You can do single or life, and then the charge for that is 75 basis points. So this is optional. The only thing that could invade your principal is this fee, just like every other indexed annuity out there in the market pretty much. So the crediting strategies earlier, those are spreads, so they cannot invade your principal. So just as an example here of how this works, what they like to call the protected payment base, you put in 100,000. At the end of 10 years, you have 180,000. That's your protected payment base. You can never, ever go below that. And then here's the age bands on this. As you can see, as you get older, the bands go up just like every other index annuity that's out there with an income rider. So let's talk about access to money. the thing that a lot of my advisors are excited about with this is that they've been able to price it where you've got access for your consumer in the first year. The liquidity features are very, very expensive for carriers. So this product has been priced. Now this says as soon as 30 days after contract issue. It's actually a little bit faster than that. But you can get 10% out penalty free in the very beginning, in the first year, and every 10% every single year after that. And then you've got two different strategies to choose from as far as time horizons, either a 7-year or a 10-year. Both completely walk-away contracts. So some additional information. The minimum is $25,000, whether that's qualified or non-qualified. Your maximum issue age is age 80. Something very unique in this industry, they give you 60 days to actually add more money to the contract. And even if you chose one of the different crediting strategies, all that money, when it came in, doesn't go to the fixed account like a lot of index annuities like this do. It actually will go into the strategy in which you chose. And then without home office approval, up to $1 million, that's pretty normal. And then the contract fee is none. Now, they have this on here as none because, as most of you have always come to hear about Pacific Life, they've been more on the variable annuity side of things. Well, some of those variable annuities have contract fees. This just does not, just to rest assured there. So your guaranteed minimum surrender value, normal things that you know, 1% on 87.5. Upon surrender, client is guaranteed to receive the greater of the contract value minus any applicable withdrawal charges, and then rider fees or the guaranteed minimum surrender value, guaranteed for the life of the contract. And then again, bypassing probate. This is another aspect that we sometimes tend to forget with, to being able to have this save money for the beneficiary. So again, if death occurs, which there are no chargebacks after just 3 months, unlike a lot of index annuities, there's chargebacks in the first year. So anything that happens out of the client's control, which is what a mutual company like Pacific Life is going to do, the right thing by the client, then they are not going to charge back your commissions if something happens as soon as 4 or 5 or 6 months into the contract. So once you get past the 3 months, there's no chargebacks. There's also no chargebacks. I had this question from an advisor that was writing some business this morning. Say, Carter, are there chargebacks on that free withdrawal amount in the first year? No, there's not. So just so you understand that. So lifetime income through annuitization, there are some variations here depending on what state you're in. You've got as short as a 1/5 option for annuitization, and there are no partial annuitizations. We can discuss that and how that works and why that's even up there whenever you call back in, but there's no partial annuitization available either. Here's the thing that I'm probably the most excited about are the options for you. We have option A, which is what a lot of my advisors have done in the past because there hasn't been a trail option available. But this is an asset-based trail, so I want you to pay attention to B and C, but D is the one that's probably in the long run, if you're building a longer a company that you're going to be, that you're younger. A lot of my AUM guys, assets under management, are loving the fact that they've got a 1% upfront commission immediately, and then 1% asset-based trail for the lifetime of the contract. You can look at B and C, and you've got 5 1/4, so a smaller amount, and then 30 basis points, or 4% if you take option C, and then 50 basis points. So these are very attractive if you're building your book of business and you're fairly young, and I have a lot of advisors that are in that mid-40, early 50 range. This eventually gives you that opportunity to wake up in the morning, because the stat from Limmer says 86% of all deferred annuities are inherited. So once they get in these contracts, a lot of times they're not even accessing them. So if you're trying to build your business, this is a great way to do it. But this is on a case-by-case basis. You don't have to choose one, and then that's the way it's going to be. Each policy that you're going to write is going to be these options. So just a quick little overview before we get into the announcement here. Strong ratings, Pacific Life. It's not only a contract that you already know. You know all the carriers out there. Strength of company, very important. Award-winning service. You got the back-end wholesale support other than even CSI Financial Group, which we're going to take care of you anyway. As well as you've got the product-specific safety principle. Remember, it's a spread product. Your principal can never be invaded, even if you do the 4% spread. That's strictly on gains only. Simple, easy, transparent interest crediting options, either a 1-year or 2-year reset on 2 different indices. And then you have an optional income rider if you want to go that route. And then again, 10% penalty free immediately, whether that's the 7-year or the 10-year. 7-year obviously there for some of those clients who don't want to tie up their money, so to speak, for too long. So just a few little ancillary disclosures here that I have to put up. So the announcement, because of the timing of the opportunity with the Pacific Index Dimensions contract, we have a top producer conference incentive trip to the Hard Rock Punta Cana in Dominican Republic. And if you've never been there, this is an all-inclusive. And if you show up, there's actually going to be an added incentive whenever you get there that'll blow you away. If you qualify for it and you are able to make it to the Dominican Republic, this is one of the nicest facilities that you'll ever be to. Phenomenal, family-oriented. The beaches are incredible. There's so much to do there that I can't even begin to tell you how much. Very well worth it if you can make it. So here's the incentive trip. Qualification period was going to be from January 1st through the end of this year. Well, CSI Financial Group, because of this last-minute opportunity, is extending that qualification period. You can see that obviously you have to be appointed directly with CSI. You also have to have be in good standing. But we're going to sweeten the pot up just a little more as well. So for any business that gets written between now and December and January, all the way through the end of January, so from now to the end of January, you will get double points for the qualification. And as you saw, I'm literally giving this trip away. It's only $1.25 million to be able to qualify. So for example, if you write only $600,000 between now and the end of January, and it goes issued by the end of February, you will qualify for this trip for 2 to the Dominican Republic. It is an incredible trip, a great opportunity, and it's my way of showing you that I appreciate the opportunity, and at this cost, I'm literally giving the trip away to be able to solidify our relationship together. So with that, if you have any questions whatsoever, have any illustrations, anybody you're working on currently, please reach out to us at 888-316-6040. You can ask for Carter Wilcox. I'm the president here. I will make myself available if one of my internal marketers is not taking care of you. Again, you can reach us at 888-316-6040. Folks, again, thank you so much for attending. I try to get this within 30 minutes. It looks like I'm hitting just on my time. There will be a recording as well, so if you want that, please let me know. Again, from everybody here at CSI Financial Group, we thank you for your time today. Have a great day and a great rest of your week.